And that is Nvidia, of course, whether it stabilizes technology and some of the selling or only adds to it. How are you thinking about it?
So I talk to people like Dan Ives about the topic, and I talk to people who aren't necessarily huge bulls on Nvidia, but the one thing everybody seems to agree on is that commentary is going to be way more important than the magnitude of the beat. Of course, like, both are important, but I really feel that we've got the first leg of the stool we got was when all the Mag 7 names reported earlier this month, and every one of them said they were either sticking to their guidance on CapEx or raising it, which I thought was probably a really good reason for the market hanging in as well as it did during earnings season. We did not get like a sell the news, even though a lot of those stocks were up big. So that was important. The next leg of the stool that you're going to get, I think, is Jensen Huang's commentary on a go-forward basis. And when you think about what the past earnings reports results have been and whether or not they've correlated to a rally in the stock or a sell-off in the stock, it's so all over the map that even if I gave you, the proverbial you, anyone watching the show, even if I gave you the number, you could not use the last 8 quarters to predict up 5%, down 10%. It's literally impossible. So let's just focus on the numbers themselves for a moment as a level set, because I want people to understand how incredibly this company is still expected to report. 38.2 billion in revenue. That would be a 73% year-over-year top-line growth number. If they exceed that, it could be 80. We have no way of knowing. EBIT should be 24.6. That's up 66%. Earnings per share should be 85 cents. That would be a 64% annual gain. So if you think about just like how monumental this stock is in terms of its size in the S&P, its size in the NASDAQ, how meaningful its commentary is for the share prices of the next 50 largest companies, it's definitely a big event. Some would call it a potentially market clearing event. I would just say, if you are too big going into this number, not just on Nvidia, but on any of the other names in the AI trade, if you're too big, you got one last chance to do something about it. If you can't withstand a 10 to 15% drawdown from today because there's an adverse reaction, you can do something about it right now. And that's really the best thing I can tell you going into that number, which, of course, I'll be paying close attention to as well as the commentary.
Yeah, of course you will. Jim will be too. Barclays calls it a crucial moment for equities. Wolf says it could change market sentiment. I think that's what we're alluding to in having this conversation, given where sentiment seems to be. Tom Lee says the earnings will be key in determining if the pullback proves to be only a quote-unquote flesh wound before the markets stabilize.
Josh Brown joins a few other analysts to uncover the secrets behind the Nvidia stock and reveal to the public all the interesting numbers that they don't see but should probably focus on in the future. But what do these mixed reviews and revelations mean for Nvidia? And what whispers are analysts shedding light on? Let's delve a bit deeper into the unfolding narrative that's influencing perceptions and driving market trends. Welcome back, everyone, to Investocracy.
Let's bring in now the Dean of Valuation, Aswath Damodaran of NYU Stern School of Business, is here with us at Post 9. It's great to have you here in person.
Great to be back.
So when you think about Nvidia, the stock really hasn't traded well into the print, which is unusual in and of itself. But how do you see it today?
No, in September, when they came out with that bad earnings report, I valued them about $90 before the election, before the market downturn, and they were trading at 108. Today they're trading at 128. So in terms of perspective, even with the beating they've taken in the last few weeks, the stock is still $20 higher than it was in September of 2024. So I think that at that time I said the stock is a great company, but I don't see how you can get to $120, $130 per share.
Still?
No, I think that's still, what I said then will still hold. They don't have the capacity in terms of generating earnings and cash flows to sustain a $3 trillion market cap. So I think that still stands. And I think as the earnings report comes out tomorrow, my expectation is going to be a lot like September, a replay of September, where they will beat analyst expectations, but the market's going to be disappointed because the market seems to have set expectations higher than what analysts are seeing for the company.
So they would say, I mean, Professor, have you seen the CapEx numbers of these hyperscalers, what they say they're going to spend? And a large part of that, if not the majority, is going to go to us. Yeah. And we know that it is. And you pay a little bit more for future growth like we're going to give you where you can't get anywhere else.
Now, if you back out from the market cap, what their break even has to be in terms of revenues, it's about $500 billion in revenues. So even if you bring in all of the spending by Meta and Microsoft, that still gets you to maybe $300 billion, $350 billion. The market is actually building in a surplus over and above that of other people coming into the game and spending immense amounts. So this is not a question of, people are spending more than expected. That CapEx spending was already there in September. It scaled up. With DeepSeek, the question is, are there other people who might have entered the game who are not going to enter the game now because their response is, I don't need those Nvidia chips. For what I'm doing, I can get there with much cheaper chips.
You think that's a new risk? Have you been thinking about it differently since the DeepSeek day?
No, in fact, I revalued it right after the DeepSeek.
You did? You think it's that profound of a change?
My value dropped by about $10 because, in my view, what it does is it reduces the total size of the segment of the AI market that needs high-powered chips and immense amounts of data. Because whether DeepSeek is a fake or whether it's going to pass by, what it opened people's eyes to, not all AI products and services need these incredibly powerful chips and huge amounts of data and huge data centers that you can get there with much cheaper devices. And I think for many companies, when they look at the AI products and services they have to develop, they don't need this high-powered stuff. They don't need to spend the tens of billions of dollars up front. So I think that's the real worry you have to have as an NVIDIA investor, is whether those people will now hold back and buy cheaper chips and build cheaper centers.
As NVIDIA continues to stimulate excitement in the technological world, financial analysts are abuzz, offering diverse insights into its future. Over the past 3 months, there's been a spectrum of several analysts sharing their evaluations. Among these voices, most maintain a bullish stance, while the minority lean toward a somewhat balanced bullish outlook. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Melius Research, head of technology research, Ben Reitzes. Ben, big quarter for NVIDIA, given the questions that have been out there about growth. Is it the guidance? Is it the color on demand? What's going to matter the most?
I think what's going to matter most, and great to see you, by the way, John, is what they say about the year, because there's a product transition to Blackwell, and that could impact the guidance for the April quarter. So the street is looking for between 10 and 11% sequential growth each quarter after that. We got to hear about a big ramp, and that could satisfy investors. So, I would urge NVIDIA to give a little color beyond 1Q because that could lack the upside, and we'll have to see how they feel about demand after that. And I think they'll say it's very strong. The other thing, John, just really quick, is that the quarter that just ended is probably benefited from a lot of buy-in ahead of tariffs and potential bans in China, with a 10-digit, a meaningful number into China. And we'll have to see what they say about export controls. That's a big issue. That's a wild card. Hopefully he gives some insight on what his conversations with the Trump administration have been. And frankly, those are tough to predict.
The rumor mills and whispers around NVIDIA products have started to remind me of Apple back in the day, and how, it would swing based on, are they going to do this? Are they not going to do this? Is this going to be late? I mean, it's becoming something unto itself. What is it that you actually pay attention to, latch on to as an investor when there are all these headlines about reading into what Satya Nadella may or may not have said about whether they have enough of the chips?
Well, there's so many things. I mean, this does remind me of the bubble, but it's on steroids. I mean, there is a data point, a podcast, a rumor every 5 minutes, and half the day I feel like I'm corralling the news flow. But with regard to NVIDIA, which is at the center of it, I think what you got to care about is the North Star. Are we moving to AI factories that replace a lot of the software and the way we do things today? And I think we are. And I think that you are seeing these reasoning models that take much more compute. So over time, we should see the market digest some of these innovations with the reasoning models, and they are going to create up to a 10-fold increase very quickly with regard to compute resources. And NVIDIA should be the primary beneficiary. So we want to see that he's got the visibility that goes out a year. I want to hear that he's got a year out or multi-quarters, like he said before, and I want to hear conviction about sequential growth through the year. That's what I care about. And gross margin, obviously, could be the wild card with regard to tariffs.
The recent analyses disclose a notable shift in the company's price targets, emphasizing the market's volatile nature. Averages from these forecasts position Nvidia anywhere between a low of $152 and a high estimate soaring to $220. Interestingly, steadfast support comes from analysts like Hans Mosesmann of Rosenblatt, who boldly maintains his buy recommendation at $220, while Morgan Stanley's Joseph Moore takes a more conservative route, lowering his previously overweight stance to a $152 target. These variations underscore the dual narrative surrounding Nvidia, a balance of anticipated growth against underlying uncertainties. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Gene Munster, he's a managing partner of Deepwater Asset Management. Gene, always great to see you.
Hello.
Hello. Wedbush is saying that they're looking for a $2 billion beat and a $2 billion raise. That's what the market's expecting. Do you think they deliver? Expectations are so
Melissa.
high.
Yeah, no, I think that they will deliver on that, in part because supply's improved meaningfully over the last month to 2 months. And so that really is the bogey, that kind of 1.8 to 2 billion beat for the quarter. I would mention that I think there's something bigger at play here, and just to kind of shortcut what to look for when these numbers come out. Guy just mentioned the gross margin number. That's important, but I think what's even more important is we're going to see two press releases that come out. One, the earnings, and second, a letter from their CFO. In that letter, it will likely be some commentary about what is the demand, how far they're out with the supply-demand equilibrium related to Blackwell. And I suspect that they're going to say we're 4 quarters out, basically through all of 2020, calendar 25. They're going to be essentially sold out of Blackwell. If that language is in there, I think that is going to be a reassuring comment for AI investors. If they maintain that it's just several quarters out, like she said in last quarter's letter, I think that's going to send kind of a shockwave. So that's probably the piece that I think investors are going to dig most into related to the NVIDIA earnings.
Nvidia, with its formidable standing in the market, paints a picture of both opportunity and strategic caution. Fans of the stock note its consistent profitability and innovation-led growth path, convincing signals it's well-placed for the future market. As foretold by several optimistic analysts, price target projections hover at an ambitious $220, while neutral stances like that of HSBC's Frank Lee suggest restrained yet positive growth at $185. But what do you think? Share your perspective down below. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.